Hi, I'm Dustin Perry, CEO of Kingfisher Metals. We're publicly traded on the TSXV under KFR. We are a BC-focused exploration team, high levels of institutional ownership, probably around 50% now, backed by a number of funds ranging from Australia to the United States through to Europe. Focused in BC, so we've got over 1,265 square kilometers of district-scale projects. Our Gold Range project is how we started. That's a 511 square kilometer project in southern BC, where we made a high-grade gold discovery, drilled up to 73 grams over a meter, broke the 100-gram meter threshold on that project. Since then, we've moved into the Golden Triangle. So now we've got a 630 square kilometer land position in the Golden Triangle parallel to Highway 37. We named the project Highway 37, and then we just picked up another adjoining project. We cover the best ground perspective for another KSM Brucejack district. And our Vice President of Exploration, Gail Febo, did her master's degree for Seabridge on KSM. And we've also got Charlie Gregg, who had the last big discovery and Prospect of the Year award in the Golden Triangle as our lead technical advisor. So well set up going into what we hope to be is a big gold market, but also a big copper market.
My name is Gerald Panneton. I'm the CEO and chairman of Terra Resources. We are located in Yellowknife, Northwest Territory, where plenty of infrastructure is already in place. There used to be two mines operating in the area, Giant and the Con mine. They closed when gold was around $325 an ounce. But what's important about it is the Campbell Shear generated 14 million ounces of gold at between 16 to 22 grams over a long period of time. This is a rich, very rich high-grade camp that straddle 50 miles or 75 kilometers, and Terra control 1,000 square kilometers of the property, including an option signed 2 years ago with Newmont to purchase the Con mine, which is a very important thing. There's a comparable or a similarity about me putting Detour in production in 6 years, from IPO to gold pour, and the Con mine option, because it's a surface lease with already mining permit now currently for reclamation. Still, surface lease is it's a very important key asset when you want to start permitting a project, because you have much less permitting to do.
Gentlemen, thank you very much for the introduction. We're going to talk today clearly about gold, and we're maybe like to start off on the kind of macro thematic for people new to natural resource investing, and then kind of maybe we'll kind of cascade down into sort of see how that's affecting Explorco companies. So, Gerald, I'll just start with you, if I may. You've obviously built mines in the past. You said to me it was, timing is everything. Is this a good time for gold miners?
It's hard to predict gold price. I mean, I think, when I built my first two mines, it was in early 2000, and gold was $400 an ounce. And we still built them because they were two quality assets. Tsulawaka was a 15-gram gold deposit. We only did close to 1 million ounces on that mine, I think 900 something. Buzwagi was a lower grade open pit project as well, that when I was at Barrick Gold, we put together in production. Those two mines together were somewhere between 4 to 5 million ounces from the Pangaea acquisition. And gold was only $400. We're challenged tremendously by operating costs. Today, all-in cost is hovering between $1,400 to $1,600 an ounce. Some mines are at $2,000 an ounce already. And you look at the average for Newmont or Barrick or Agnico Eagle, and it's quite high. The gold price is great, don't get me wrong. The gold price doesn't have much room to go down because of those costs. Putting a mine in production in today's world is a lot more challenging, because of the cost of building, the location, the remoteness. And I think we're just at the beginning maybe of a new gold price. We see all the uncertainties in the world. I don't predict gold price. As explorer, developer, producer, we adapt to the gold price, and we do the best we can to find very good asset. And in my mind, what I learned from Detour was not to build another Detour, because Detour was built in probably the perfect timing you could ever dream of as a window. I start Detour is $450 gold. I'm raising the money to build the mine. It's $1,900 an ounce. It cannot be better than that. It's 300%. But if you go into the Turin market, $2,300 an ounce, this is great. Look, gold is up 30% in the last 6 months, 8 months. Great environment. And our company has evaluated at $10 an ounce just because there's no market. There's no interest currently. And we need to be able to change that. And this is a market situation. This is not my work or Dustin's work. We're trying to find good gold deposit with good economic in the proper jurisdiction. That's why we work in Canada. And I think this is the advantage of today's panel.
Well, I mean, Dustin, coming over to you, give you a chance to talk on the topic. As a explorer, almost pure play explorer, how do you behave in a market like this? Clearly, investors are excited about a high gold price, and maybe for producers, they're seeing the benefits in terms of increased cash flow. But down at the explorer, and how do you behave? How do you need to behave?
Well, it's been a challenge. There's no doubt in that. It's been really dilutive raising cash. We recently completed a consolidation for that reason, basically to just reboot the company, start from scratch. And we're doing the same thing we always do, systematic exploration, looking to make a discovery, because a big discovery doesn't really matter what the gold price is. Obviously, it's going to get more rewarded in a better gold market. But we are in a pretty good gold market. But ultimately, if we go out and make a big discovery in the Golden Triangle, we're going to be rewarded handsomely. The difference now, I would say, is we have to be incredibly picky in how we do exploration, and we can't make any mistakes in terms of doing things out of order. So we need to do everything we can to de-risk our drill targets prior to drilling. The cost of drilling has gone up along with the cost of mining. Labor across the board has gone up. I would say the one thing that hasn't gone up are geologists' salaries. But pretty much every other cost has gone up. So I would say we're approaching things a little more conservatively than we have over the last couple of years, given the lack of available capital.
Okay, but you talk about having to be really efficient, and obviously you do. One, because there's not a lot of cash. Two, it's quite expensive at the moment, it seems, and as are your costs. So when you did a raise recently, you would have had to convince investors that you were going to do all of the above. One, to spend the money efficiently, but two, still be able to make discoveries. So that's the name of the game. So what was their kind of pushback with you?
I wouldn't say there was a lot of pushback. A lot of them were returning shareholders that had backed us for a long time. And then a lot of the other shareholders, a couple new funds came in. They're backing teams that are doing good science, that have, the right people on the technical level, but are also operating in the type of region where, the reward will actually justify the exploration expenses and maybe some dilution. So, we're focused on one of the best areas to be exploring in the world. Newmont just acquired Newcrest. Newmont borders us to the north and the south on our project. Tom Palmer, I believe it was at BMO, announced that Newmont's going to be in the Golden Triangle for the next 100 years mining. I don't think they have enough mine life right now, so they're going to have to make new discoveries or acquire the juniors in that area. So I think, it's a good risk reward. That's what they see, and we're not wasting money. We've put over 80% of the money we've raised to date into the ground since starting this company. So, we're doing things the right way that the institutions want to see, and hopefully retail will pile in at some point here.
Okay. So the institutional guys, when you reach a certain size, I think we'll probably lean in. But Gerald, let me talk to you. You've seen recently a lot of M&A. We saw BHP's failed attempt with Anglo. We've seen a lot of mergers of equals groups. Producers, industry is investing into other producers. It's a better return for them. They're getting more resource, they're getting more reserve, they're getting ounces, and that seems to be the way that they want to go. Will they necessarily look to invest into some of the developers, some of the explorers? How do you see this going forward?
Interesting comment, because when the majors are merging, such as Newmont and Newcrest, it's because they cannot grow on their own. Look, I spent 12 years at Barrick, and Peter back then, with 8 million ounces, was asking us to go to 10 million ounces of gold production a year. And we were scouting and scoring the world trying to find the proper asset. And you have to look at Newmont, for example, which is current today, 6 million ounces production. Why did they merge with Newcrest? And maybe that's because of better presence in the Golden Triangle, which is a very good target. Currently, it's a hot topic. There's a lot of people. I'm in Yellowknife, and nobody talks about Yellowknife because I'm by myself. Dustin has the benefit of being in a camp where there's about 20 companies or 25 companies active. It's great momentum on its own for that reason. But to go back to the producer, will they come back and buy more companies? Yeah, it's possible. It depends what you find. Their threshold, those companies, is like 300,000 ounces of production a year. So you need to find something substantial. But at the same time, it's very difficult. Look at Barrick today, 4 million ounces. How many bad decisions did Barrick took to get to 10? Right? How many bad ones? I mean, now you have to clean up everything and start again. And Mark Bristow thinks he's going to grow organically, with Reko Diq and other things. Look, it's very, very difficult and more difficult to find gold and to build it. Our job as explorer, advanced project development, it's to de-risk those projects. You become a lot attractive. Parallel can be said. Blackwaters was purchased by Artemis while it was already almost permitting. I don't know what was the level of permitting that was reached when the Blackwater was sold from New Gold to Artemis. But this is the kind of thing the major will look a lot. But when two producers merge together, they create bigger value, and they base all of their acquisition on eliminating duplication. But they don't create more value. We are the one who create the value, especially if you're $10 an ounce, $20 an ounce, and especially if you have a potential to go from 1 million ounces to 5 million ounces. I think this is how you create value. And that's what the junior mining industry in Canada has always been very good. And in a difficult market like today, the best project and the best teams will survive.
No, I agree with you that you are the lifeblood. You guys create the products which these hopefully go on to be get into production, etc. But when there's a lot of people saying the same thing, I just wonder how you behave to stand out. Track record and credibility is everything, Gerald, as you've told me many, many times. But what are the other things that we should be as investors? Because look, there's investors watching this. They want to understand how to play the gold game. And you and I, all three of us, we know there's a lot of shysters out there. There's a lot of people, just lifestyle companies, just getting by, not really worried about what the end product looks like. So, Dustin, again, coming back to your conversations, you've attracted some very good, strong investors. How have you done that? What are they buying?
Well, it's what we're focused on and what we're trying to discover. We're not in an area that has never seen a major discovery, or an area where the best discovery was 1 million ounces. We're targeting big discoveries, and we have the right ground to do so. So, you can't put a KSM deposit in, say, I don't think you're not going to find 100 million ounces gold in Newfoundland. So if that's what you're looking for, something that's going to make a difference on the bottom line of a major.
Do you know how long Crystal Fred has been around?
It's been around a long time, but there's a lot of other issues with it.
I used to work at Placer Dome. Okay. Dustin?
Yeah, no, it's been around ages. It was
with Placer Dome when we were drilling Crystal Fred. It was the biggest Placer Dome project back in 1989. It's been exactly 35 years. I've been on Sukhoi Log.
You were there when I was 4 years old.
I've been on Sukhoi Log in the middle of Siberia. It's 50 million ounces of gold at 2 grams. There's zero infrastructures. It's still a project that will not get developed for a long, long time. So you have to be careful about big project. Sometimes you don't
Absolutely, but that's one thing we've approached this differently, is that we are within sight of the highway. So we've got a piece of ground that's been slightly overlooked. It's seen less work over time, so there's less understanding of the potential there, but it's right next to the highway. So KSM requires a 40-kilometer tunnel to get into it. Bruce Jack, they've got a road going over a glacier into it. If you can put a 9-kilometer road off a highway with a power line right there, it definitely changes the dynamics of that. That being said, I'm not sure that a project like KSM in the low grade form is the way to go. Maybe focusing with block caving on the higher grade core. And now that Newcrest is in that area, or Newmont, they've got Newcrest's block caving expertise that they're applying at Red Chris, and I can see them using that team to apply to KSM.
I wish they will come to fruition. Okay, and I wish the best of luck to Rudy and at KSM. And Rudy is not going to build it, right?
Absolutely not. No, it's going to take two companies to do that.
Many years. And Rudy told me that himself. He said, I'm not going to build it. But the challenge of big deposit is exactly that. I mean, we can push to the envelope and say, what will Pebble ever get developed in Alaska, right? And they require, I managed to build Detour in a very good window. And since it's a panel, it's open discussion. You can challenge me, Dustin. I have no fear of challenge. But I think there's a balance between low grade and high grade. Low grade deposit requires a huge amount of capital for a huge amount of rock. And I say rock is equal to risk. That's the way I see it. For a very small margin. We built Detour for $1.5 billion, completion in February or January 2013. Cote Lake just got built in Ontario with better infrastructure than Detour, a lower grade, a smaller mill, not that super small, but for more than $3 billion US. Like you said, the challenge today is people, salary, supply chain, building, and everything else. And it can be extremely difficult, right? So we're facing our challenge, right? Challenges are different today than they were 15 years ago or 20 years ago. But at the end of the day, that's why I switched to high-grade target. Smaller investment, big margin. That's my goal. And I think this is, and because of Canada, the Golden Triangle, I'm glad that you're by the highway. Well done. And I'm glad also BC has a lot of power. But think about the Yukon. Is there any power in the Yukon?
No.
One.
And good luck building a road.
And they asked BC, can you supply some power? I said, no, we're buying some from the US these days. So it's like, you have to have, the investor needs to look at projects. And they need to have the same thing we do on every corporate development evaluation. What are the 5 most important things? Location, 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 the project itself, and the management team. But the first 3 is about location, because location means people, infrastructure, power. And if you don't have this, it's a high, difficult road up, because everything needs to be permitted, including your power line or your road. So stay by the road, stay in an area where it's easier, and it'll be easier to develop it. I'm sorry.
Yeah. Well, luckily, we have no intention of developing it, and we're trying to generate significant returns for our shareholders, and a discovery can do that.
Yes, it can.
The good examples of the interest in porphyries would be, Barrick's big investment in Hercules Silver recently, which is a copper moly porphyry, no gold in it. The systems in the Golden Triangle are copper gold porphyries. So we are truly, we're not just a gold explorer, we're a copper gold explorer. And, you have that benefit of exposure to copper and exposure to gold. KSM, the economics aren't great on it. It might be too big. It's too low grade potentially. But within that, if you look at, the cores of those systems, they do have exceptional grades. And, KSM is I believe it's the largest undeveloped gold deposit in the world and the 3rd largest undeveloped copper deposit. It doesn't really get any credit for its copper because it is low grade, but that doesn't mean there aren't high grade portions of it. One thing to touch on though is we also like high grade, and we do have a high grade gold system on our project already that's the same age as Bruce Jack. So we're taking a 2-prong approach, de-risking all targets across the project. That's the stage of exploration we're at. We're not at a resource stage yet. So, if the high grade opportunity seems to be better, then that will be the focus. I do agree. It's a hell of a lot easier to build a high grade mine than a large copper gold porphyry.
But the big company like Barrick, Newmont, Agnico Eagle, they need, if you produce 5 million ounces, you want to do it with 15 mines, not with 30 mines.
Yeah.
That's the rationale. There's no company in the world that can manage more than 15 to 20 mines. So if you cannot produce 3 million ounces with 30 mines, basically. That's too much.
Yeah, no, and I think, guys, by the way, really interesting discussion. I like it when you guys are bouncing off of each other. Please feel free to do that more often in this conversation. And I'm sure everyone at home will feel the same way. When we've been talking recently and I was in Quebec last week, we're talking to a lot of the kind of Quebec companies sitting there on significant ounces, but low grade, as to your point, Gerald. And they are advanced development stories. They are low IRRs, high capex, $1 billion plus capex, and they're saying, well, this is the new norm. Maybe people need to get used to it, because there aren't that many high grade stories out there. I mean, Dustin, you're out there obviously trying to prove them wrong. So, again, to talk to us, when you go and pick, you've recently consolidated some land package here. What are you searching for? How do you identify what could be the next sort of high grade discovery in the district?
Well, we already have a high grade system that just hasn't been thoroughly explored, in our opinion. The drilling there predated the era of 3D modeling, for example. Our VPX is a structural geologist and sees a lot of potential for drilling the chutes to that. But there's many other targets across the project. One thing I want to touch on, though, that you just alluded to about the low grade is you see a lot of people mentioning their project with higher prices saying, this might be economic now in the future. It's like, well, what about all the things that were barely economic that never went at the lower gold prices? It's like, why are they going to pick your deposit at 0.2 grams over the one at 0.7 that was on the brink of working before at a lower price?
Ask them about their tailings grade. If you have a 0.2 gram deposit, ask them what the tail grade is, and if it's 0.1, it's very hard to recover all of the gold.
Yeah.
No, I feel we could go through a list of companies and you could destroy them.
But it's not our job. Our job is actually is creating value for our shareholders.
Yeah.
Okay. So we're responsible, Dustin and I, to find projects that are economic from the start. So even if you're a geologist, a financial guy, a mining engineer, if you are the leader or the champion of a company, your job is to basically find enough gold that is economic and de-risk it. So depending where you are, you have some advantage. When Dustin says, take a picture from the road, it's a great advantage because I get a road. I don't have to use a chopper for drilling, or my season is 12 months a year, or all of those things. At the end of the day, the investor that invests in our companies or in different companies in the sector, they need to do their own due diligence. And it's not a big list. It can be summarized in a very, very short way. But the track record is differently important. Even, you hear it in the developer world. I mean, we've done it before. We can do it again. And it's true. Look, do you know why I built Sulawaka so well, my first mine? I was watching Bulyanhulu being built. I learned from all the decisions that were taken on Bulyanhulu to make Sulawaka better. And that's why I was successful with my first mine. You don't come out of the boonies without a track record, experience, knowledge, things like this. And I'm sure Dustin and his team in the Golden Triangle, with the amount of information that there is, he will find his way because it's a great place to be exploring now.
Well, it is, and I think it's going to be better with the use of newer technologies. Dustin, I mean, you've been talking to me about some of the approaches that you're going to take going forward to be able to kind of use this. Is it AI or is it machine learning? How would you describe?
Yeah, it's machine learning. Yeah, we're applying machine learning, the same or one of the main members of the team that won that Gold Rush Challenge for Integra, probably almost 8 years ago now. He's leading it up for Verify with Steve DeJong, who was the CEO of Integra. And, it's just another layer in your data set. But what it does is we don't have a huge team. We're small. We're around $10 million market cap right now. It's going through a huge amount of historical data. We're flying a Z10 survey starting this month. And all this data we can use on, we got 3 deposits with intercepts over 200 gram meter gold equivalent. So we know where systems are, and we can take this historical data and this new survey and fingerprint everything and then apply it across this giant 630 square kilometer area. And it's taking a bit of bias out of the desktop exploration, but it's also going to save us a lot of money. We are using helicopters. We're near the road, but we're still using helicopters. So, if you do something like this and it saves you a few helicopter flights, it's definitely worth it. So we'll see what comes out of it. I know Kodiak, Chris Taylor, the chairman of Kodiak, they've been using that down in southern BC on porphyry targets. So it'll be interesting to see results. We don't have them yet, but I think it will inform some of our exploration this summer, and it will allow us to really focus our work and not waste any time and just increase efficiencies.
Well, it's going to have to, because I think obviously, as you said earlier in the conversation, costs have gone, up, and there seems to be no abating that. Obviously, you geos taking a hit on your salaries very generously does help, but you're going to need technology to kind of come to your rescue in a way, because I'm looking around and I'm trying to see where the new money is, if the new money is going to come into exploration, one of those sort of higher risk side of mining or natural resource in investing. And what else is out there on your side when you're sort of looking at coming back to that efficient use of spend? What else are you doing?
Well, that's really it right now.
Yeah.
One thing I will say, though, is in terms of cost, the one thing that has come down this year is the Z10 survey we're flying is about half to 2/3 the cost of what it would have been a couple years ago.
Right.
I think that's a good indication of the lack of investment dollars in the area. And, it's pretty dead. It was pretty easy to staff up for this year and, pick the best of the best, whereas a few years ago, everybody was scrambling. The efficiencies we're doing is just doing as much desktop work prior to drilling. And then doing as much groundwork in the field. Right.
But in fact, a conversation I had earlier today with some silver guys, they were talking about, some of the less savory characters in the space. And, when metal price moves, they all seem to jump on the bandwagon, dig out an old project from the back of the drawer and rehash it, and off we go again. For people looking at investing in gold, you've both done, I think, been quite candid and explained what is important to look for and look at. What's your view on and take on some of these companies that inevitably will jump on the bandwagon, and what that does for your ability to raise cash? I mean, Gerald, you're not short an opinion on that matter, I'm sure.
No, but look, what Dustin is doing in the Golden Triangle was actually done. All of this work was done previously, myself joining Gold Terra in 2019. Database information needs to be digested. And in today's, we have much better tool than we had like 40 years ago, where we had to do everything on paper. There's no question that the AI information, the different things we're using, we also have a verified model on the Combine. And it's a database that has like years of mining, years of drilling, and it's pretty complex. So for example, when I say we're going to find 2 million ounces below the Combine, look, it's Archean geology. It goes for 5-6 kilometers down. What is the deepest mine in Canada today? 3,400 meters. La Ronde in Quebec. So those deposits are very different than the Golden Triangle. And that's what's beautiful about Canada, is that we have very, very different geology. Like I said, when Dustin said that you're not going to find 100 million ounces in Newfoundland. It's true. I mean, you may find something, but it's going to take 100 mines to do so. Look, geology is geology. We have models. We need to understand them very well. And this is younger geology. I'm not sure exactly the age of the BC rock that Dustin is working on. But compiling properly all the information is a big saving before you start drilling. Our cost of drilling at surface is $200 per meter all in Yellowknife. And the main reason is because I can stop at the Starbucks and go to the drill, and I'm there 5 minutes later, and my coffee, which is black, is too hot to be drank. I have to wait. This is what you call, or winter road in the winter. I still drill for $200 a meter. And the biggest advantage, and when I said that to the investor, location, location, location. Your cost of drilling is in direct relationship with operating costs. No question in my mind. I've been doing this exercise for more than 30 years. When it costs you $500 per meter, you'll be more expensive to operate. Brucejack is expensive to operate. It's high grade, it's expensive. Why? Because when somebody wants to visit, they take a chopper because there's no road access. So having infrastructure is a huge benefit. Having hydropower is a huge benefit. And to go back to cost, you need to be able to control that. And it's much easier when you have infrastructure, or everybody goes home at night. I built a Detour Gold or Detour Lake mine about a year after Osisko. So I was a year behind Osisko. And it was challenging because I had to spend more money. I had to build a camp for 400 people, 400 beds, because I had at least 200 people working on 2 shifts. And I had more than 800 employees because I had rotation plus a 5th shift for backup. So you look at all the costs of being remote, they adds up very quickly. They adds up a lot. But like I said, location is your first reading, exactly like in real estate.
Dustin, you were about to interject there at the beginning.
Yeah, just to, talking about the data sets and what you can pull out of them. One thing that I think a lot of investors wouldn't be aware of is when you're logging core, which is the key to geological understanding of drilling. So my first job was in the Yukon as a summer student one summer. I was logging drill core. Never in a million years would I have a summer student logging drill core for Kingfisher. You want your best geologist logging that. That's what you're putting all your money into. That is the most important information that will dictate whether you have success or not. And one desktop thing we're working on right now that is very inexpensive is just going through old logs, looking at the geochemistry, looking at core photos if you have them, and reinterpreting and actually coming up with what the rock types are. Because if you look at a log and then you figure out how old that person was, do your research, and even you might see that same geologist on another project and be like, I don't trust this guy's work. It's a pretty key piece that most people aren't really aware of.
Well, it's like to reinforce your point is because historical data can be very tricky. You don't know who logged. And quite often, for example, you're putting all the mine stuff. They have their own terms to quickly log because it's production drilling. It's not exploration drilling. But to your point, if you log a lot, like I've done in my first, say, 10 years of being a geologist, you learn a lot. But at some point, even if you're a student, it's okay to start. Just make sure you're there to tell him what to do or check on him. I'm sure you were very well coached. But the information that goes into that log, whatever it's small, it's like, this thing about in Archean geology, to do better structure, you need to repuzzle all the core, making sure you can read the schistosity and the different structure because there's more than one. In porphyry copper, I'm sure you have a lot of different set of fractures, alteration, things like this. So yeah, it's the beginning, it's the base, and you pay a lot for that drill core, and sometimes you don't do much about it. You don't do enough. You could do as much.
With all data sets, you see groups fly an airborne survey. They get a colorful map they put in their presentation. They don't actually have a geophysicist look at it.
Well, they do usually when they fly it because there's a geophysicist, but the interaction between the geologist and the geophysicist is very important.
The best we have a couple of geophysicists who are also geologists, who can who look at things from an exploration standpoint, not a science experiment, which makes a big difference.
Boy, you're saying a few things. We had a conversation with an asset we were looking at buying. 20,000 meters of drilling. I got excited because that would save us a lot of time. But when we started actually getting into the detail, the data as recorded, we couldn't replicate. We could not replicate. So we ended up walking away from that, and we were kind of brought into the project by an enthusiastic geologist, and not, as I think Dave Cole of EMX describes him, an economic geologist. So these are all important points that you make, and we've talked about today. But I was also kind of conscious of your time, guys, because I want to give you both a bit, a couple of minutes just to maybe pitch your projects. You're slightly different stages, and you're coming at it from slightly different directions, but you are both quality people with solid assets, and I'd love to give you the chance to do that. And I mean, Gerald, should I start with you? A couple of minutes, pitch to people as to why people should be investing in gold Terra resources.
Well, I think it's quite simple. I mean, our company is focusing on high-grade gold deposit in a camp which mined 14 million ounces over, say, 5-6 kilometers strike length. We have a very good understanding of the geology. The Campbell Shield produced this, straddled the camp over a distance of 70 kilometers, and we control all of it. And with the con mine option that we had with Newmont, which wants just to get rid of the liability, we have an amazing potential to find more ounces. We've already have 1.8 million ounces in our book, and we can definitely, with more drilling, increase that value and find a lot more. Our threshold, our target, is to find 2 million ounces on the con mine, and I think we could be there within the next 2 years if the markets support proper financing.
I would say simple story too, but quite different. We're looking for the best of the best porphyry copper gold deposits in BC, but also high-grade epithermal systems. And where do you look for those? You look in the Golden Triangle. Yes, you do have... Location is good, but there are challenges. It is more expensive, but you do have supportive Indigenous group, which kind of puts you well above a lot of places around the world. You do have cheap power, and you do have increasing access in the area with majors trying to develop projects in that area. So what we've put together is a very large piece of ground that sits in one of the most underexplored yet highly prospective parts of this region and parallel to the highway. We put together a team that has experts in the region between Charlie Gregg and Gail Febo. They're two, probably I would say the top 5 geologists in that area over the last 20 years. And the clues are already there. There's already intercepts. There's already large alteration systems. A lot of work has been done to date these intrusions, and it's the same setup as the KSM area, but we've also just added more ground at a very low cost. Now we've got Galore Creek targets with excellent copper grades surface. So I would say with all that in mind, a lot of the due diligence has already been done by the institutional shareholders of ours. They've continued to back us, even from when we were exploring Gold Range, which is a completely different target. They appreciate that we're not wasting money. We're doing things in the right order with very good geoscience, and we're focused on finding something big. So if we hit, it will be big. If we don't, we'll keep on trying.
Okay. But guys, for everyone at home watching this, listening to this, reading about this, you've got some pretty big clues there as to what you should be thinking about and who you should be thinking about investing in terms of the people, the asset, the location 3 times, and all of the other things mentioned by these guys today. The quality of the team cannot be underestimated. And these 2 guys, you've got the pick of the bunch. So, guys, appreciate time today. We'll see you again soon.
Thank you, Matt.
Thank you, Matthew.